A recession is coming, and the media wants you to be terrified, paralyzed, and reactive. Most people will watch their portfolios bleed and panic sell at the absolute bottom, cementing their losses forever. But the elite class, they are not panicking. They are preparing their liquidity for the shopping spree of a lifetime. Crises are where assets move from weak hands to strong hands. Distressed properties and businesses go on sale for pennies on the dollar. The chaos you fear is the opportunity they have been waiting for. It is the clearance sale of the decade. They are the apex predators of the financial ocean, and a recession is simply feeding time. The system is structured so that when the cycle inverts, those with capital absorb the market share of those without it. When the market crashes, it isn't destroying wealth, it is simply transferring it from the impatient to the patient. The herd mentality drives the average investor to sell when they should be buying, driven by fear rather than logic. While the news screams about the end of the world, the smart money is quietly picking through the wreckage. Real estate that was unaffordable yesterday becomes the bargain of tomorrow, but only if you have the cash to act.
We are witnessing historic lows across the board.
They distract you with headlines to keep you blind to the technical signals that the bottom is near. Every signature on a foreclosure document is a transfer of equity from a debtor to a creditor. When liquidity dries up, the treasures of the economy are exposed, waiting for someone brave enough to claim them. This is the high-stakes table. While the amateurs fold their hands, the professionals go all in. Businesses don't just die, they change hands, moving from inefficient owners to those who know how to optimize. A fire sale is painful for the seller, but it is the primary way that generational wealth is acquired by the buyer. Understanding the economic cycle means knowing that winter is always followed by spring. Your diversification won't save you if you don't have the stomach to hold on when the storm hits. Cash is trash during inflation, but during a crash, cash is king. It is the ammunition you need to hunt. We must analyze the mechanics of the business cycle, a predictable wave of expansion and contraction that has occurred for centuries. The expansion phase is fueled by cheap credit and optimism, leading to male investment and asset bubbles. The contraction phase is the necessary correction, a cleansing fire that burns away the inefficient and overleveraged. During the boom, everyone looks like a genius. During the bust, only the solvent survive. The liquidity crisis is the moment when credit markets freeze, and even good assets cannot find a buyer. This is when the vulture investors strike, offering immediate cash for assets at a fraction of their intrinsic value. They are not gambling, they are buying dollar bills for 50 cents because the seller has no other option. Consider the Great Depression. While millions lost everything, fortunes like the Kennedy dynasty were solidified. They held cash when everyone else held debt, allowing them to buy entire city blocks for the price of a single home. The modern equivalent is the corporate bond market. Watch for fallen angels, companies that are solid but temporarily downgraded.
I've been waiting here for hours now. They treat you like a number in this place.
When a company is distressed, its stock price reflects fear, not reality. This is the asymmetric bet. You are risking a small amount of capital for a potential exponential return once the market stabilizes. But catching a falling knife is dangerous. You must wait for the blood to stop flowing before you step in. The signal to watch is capitulation, the moment when the last optimist finally gives up and sells in despair. That is the bottom, that is the moment of maximum financial opportunity. Institutional investors have algorithms that detect this sentiment shift instantly, executing buy orders in milliseconds. You cannot compete with their speed, but you can compete with their patience. The retail investor panics because they need the money now. The wealthy investor waits because they have a safety margin. A safety margin is the buffer of cash that allows you to sleep at night while the world burns down around you. It transforms a crisis from a threat into a shopping trip. Real estate is the classic play during a recession. For sale signs multiply and sellers become desperate. You are looking for the motivated seller, the person who must sell due to divorce, debt, or job loss. It sounds predatory, but you are actually providing liquidity to a market that has none. You are the buyer of last resort, solving their problem while securing your future. Commercial real estate often suffers the most. Office buildings and warehouses can go vacant for months. This is where the deep value lies, in repurposing distressed commercial assets for the new economy. But be warned, cash flow is the only thing that matters during a recession. Appreciation is a myth until the recovery starts. If the asset does not put money in your pocket every month, it is a liability, not an investment. Avoid consumer discretionary stocks. When people lose jobs, they stop buying luxury handbags and new cars. Focus on consumer staples. People still need toothpaste, electricity, and food, regardless of the GDP. The recovery will not be a straight line. Expect a dead cat bounce, a fake rally that traps eager bulls before crashing again. Discipline is your greatest asset. Do not fire your ammunition until you see the whites of their eyes. The wealth effect works in reverse. As asset prices fall, people feel poorer and spend less, deepening the recession. This feedback loop continues until the central bank steps in to lower rates and print money. That is the signal for the next boom. When the money printer turns on, asset prices will inflate rapidly. If you bought at the bottom, this inflation will lift your new assets to the stratosphere. You will look like a genius, but you were simply prepared when others were paralyzed. The window of opportunity is narrow. Recessions are sharp and short, while expansions are long and slow. You may only get 3 or 4 true opportunities in your entire lifetime to buy at the bottom. Do not waste this one by watching the news and trembling in fear. Build your war chest now, reduce your debt, stockpile cash, and study the assets you want to own. When the storm hits, put on your coat and walk out the door to buy. The crowd will think you are crazy, but the crowd is always wrong at the extremes. Wealth is not made in the boom, it is made in the bust and collected in the boom. From the ashes of every collapse, a new class of millionaires is born. The question is, will you be one of them? The sun will rise again, but the ownership of the city will look very different when the smoke clears. This is wealth obscura. Stop fearing the crash and start preparing for the transfer.